Senate Banking Chair Tim Scott is abandoning plans to hold a vote today on landmark cryptocurrency legislation. That, a byproduct of the biggest name in the industry speaking out against the legislation after months of working to help craft it. Coinbase co-founder and CEO Brian Armstrong taking to X, saying the legislation would effectively ban tokenized equities and would offer draft amendments that would kill rewards on stablecoins. Said Armstrong, we'd rather have no bill than a bad bill. Hopefully we can all get to a better draft. Matt Hougan, Bitwise Asset Management CIO, is here. Matt, good to see you. How much of a roadblock is this for the crypto industry?
It's a significant setback. I think the crypto industry was really hoping that we would get this bill. I think it's still hoping that we would get this bill. We said at the beginning of the year that passage of this bill would mean that Ethereum and Solana would trade to new all-time highs. If it's now uncertain, and it looks a bit uncertain, I think the outlook is a bit uncertain. There's still hope. There's still reasons both to expect this bill and to expect a good year for crypto. But be sure, this is a setback.
Matt, I'm going to assume this gets done, whether it's in a couple days, a couple weeks, that this gets done. What happens after this legislation passed? What should investors know?
Yeah, what this does, and I'm with you that it will get done. The old saying is that bills have to die 7 times in Washington before they pass. This is, I think, its third death. So let's be optimistic. If it does pass, it creates a firm regulatory framework that will last for years. Right now, crypto has done well over the last, let's say, 2 years because we've been in a positive regulatory swing. Washington has been in favor of crypto, but that could switch with a new administration. What this bill does fundamentally is make it so that that won't switch. So crypto has a strong foundation to build on. There are lots of specifics to it, but that's the big one. Do we have a big, strong foundation for which we can build a new financial industry?
I loved your 2026 predictions you sent along. I want to go through a couple of them. One, more than 100 crypto-linked ETFs will launch in the U.S. How will that change the ETF industry? And how should investors, assuming even half of these launch, even 10 of them launch, how do you go about investing in one of them? What do you need to look for?
Yeah, well, it's like the rest of the ETF industry, which has thousands of ETFs, but most of your money are in a few. Most investors will be best served by diversified crypto index funds. We run one, BITW at Bitwise, that gives broad-based exposure. But what you'll see out of these ETFs is a lot of individual asset ETFs launching on exciting new assets. We just launched one on Chainlink. A lot of thematic ETFs that give exposure to stable coins, tokenization, AI, and other themes. I think the right framework is the traditional ETF industry. Most of your money in a diversified index fund, and then use these exciting new launches to nibble around the edges and indeed ignore some of the more far off, unusual ones.
I wanted to leave a little time for this one. Another prediction you have is Bitcoin will be less volatile than NVIDIA. Now, when I think NVIDIA, Matt, to be fair, I think about strong free cash flow, strong earnings reports. I know what they're doing. I mean, Bitcoin, despite all of its advances, the industry is still, it's opaque and it's tough for people to understand it. Why do you think this is going to happen?
Well, here's the incredible thing. We are sort of gifting ourselves a prediction here because last year, Bitcoin was about as volatile as NVIDIA. One of the things I love to do when I speak with institutional investors about Bitcoin is update their priors. People think of it as this wild and crazy market. How could you put it in a portfolio? Actually, for the last year or so, it's been about as volatile as the average tech stock. This is not your grandfather's Bitcoin. It's now a mature institutional asset, still with a lot of upside, but a lot less volatility. We just think what's been happening for the past few years is going to continue this year as institutions leg into this trade, which is what we're seeing to start the year.
One more, Matt, before I let you go here. Bitcoin's correlation with stocks will fall. Why?
Yeah, absolutely. Well, just think of everything that's impacting the stock market. Concerns about the AI bubble, invasions of Venezuela, sort of government policy. You have a lot of things that are impacting the stock market that don't impact Bitcoin. It's being driven by other factors. It's being driven by fiscal debasement. It has this huge institutional investment going on. They're just being driven by different things. And as Bitcoin matures, it's going to increasingly act like its own thing, not like a risk-on asset, but as a unique asset that fits into portfolios and makes the whole portfolio perform better.
All right, Matt, thanks so much. Good to see you. Have a great rest of the week. Appreciate it.
Thanks for having me.